Good morning, everyone. I wish everyone have a wonderful year 2022. I will be covering the mortgage update and market trend today. Then Chris, can you turn up the first slide for me? So first, mortgage update is loan limit. So every year I'm talking about the loan limit, but this year is loan limit is jump a lot, about 100,000 compared to last year, which means government expecting the house value will be going up a lot. So that's why the conforming loan amount is up to 647,200. The conforming high balance loan amount is up to 970,800. So what is the important thing on the loan limit is over 970,800 loan amount we consider as a jumbo loan. The conforming loan and jumbo loan has a different characteristic. First one, conforming loan has a more debt to income ratio is up to 50%, and then the reserve requirement is very small. And second thing is less down payment. For example, if we have $1 million house, if you put down 5% down, the loan amount is about 995. So no, 950,000. So with $1 million loan, with a 5% down, we can get a loan. So which is very, very big advantage with a conforming loan. And the interest rate is pretty decent. With the high balance with the 5% down is around high 3% as of today, 3.7, 3.8, but we can still have a house with a 5% down. That's why loan limit is very important for everybody. So like as a realtor's aspect, the loan limit give the buyer to more buying power. So we can reach out to customer. Hey, if you have a 50,000, you can have $1 million house. And then this is Bergen County, but I don't say any other small counties, but so Fort Lee is on the Bergen County. I'm telling based on the county limit. The second thing is we have a lot of the two families and then multi-units on the Fort Lee and then Palisade Park area. And then 2 unit is conforming is starting from 828,700 to 1.2 million. So which is like if you do the 15% down, you can have around $1.4 million house. So which is giving the great buying power to the buyer. So if you have a good income, if your buyer have a good income and the less down payment, please don't say to the buyer, hey, bring more money. Just talk to the loan agent first, how much he can qualify. Like, let's say even though they have a 1,500 or 200,000, they can buy a 2 unit for the $1.4 million house. And then if they have a $50,000, they can buy $1 million single family or townhome or a condo. So when you have a buyer have a good income with a less down payment, you have to consult the loan agent like a Chris Park or Patricia Choi or anybody, so you can touch with. The second thing is website. So we're writing down the website for the FHA mortgage limit. FHA has the same feature. So FHA loan also can do up to $1.2 million with a 2-family house. So when you do the multi-million-dollar house, please ask a loan consultant first with a minimum down payment. So right now, the feature is many younger generation interested in the buying houses like a condo, townhome, and then single homes. So they have a good income, but they don't have a good enough down payment. That's like a very good thing to have a higher conforming loan limit. So you can find out the loan limit on the FHA like a HUD.gov website. And then when you're buying a condo, you have to go to FHA approved condo list from the website. Second thing, I'm gonna update for the mortgage seasoning the period. First one is conventional loan. If you do the foreclosure, it's 7 years, bankruptcy 4 years, the short sale also 4 years. FHA loan is a little shorter. So foreclosure 3 years, bankruptcy 2 years, short sale 3 years. And the VA loan is Veterans Affairs. So somebody who serves for the National Army or for Air Force or Navy or anything else, like we call the veterans. The veteran loan is shorter seasoning period. Foreclosure is 2 years, bankruptcy 2 years, short sale 2 years. So this is about some update on this year. And then I'm gonna talking about the conventional loan right now. So majority of the loan is conventional, and then like a 60% loan is conventional, and then 15% is FHA, like 10% is VA, and then 10% is jumbo of the mortgage industry. So that's why I'm gonna start up with the conventional first. So conventional loan is governed by Fannie and Freddie Mac. So we have to follow the Fannie and Freddie Mac guidelines for the conventional loan. So features is, so we can, first time home buyer, we can do 3% down up to 647,000 loan amount. So if they buying around 700,000, if they have a 21,000, they could buy a house. And then if it's 3% down, can be 100% gift. So gift means you can have money from parents and then house member and cousins. And the conventional is okay with a friend also, but FHA loan is only family members. So good thing of conventional loan is debt to income ratio is up to 50%. This is major difference between bank and us. Like we are okay with a 50% debt ratio, but like a Chase Bank or Bank of America or Wells Fargo, as a majority of banks, they kept with a 43% of the debt to income ratio. That's why if bank said no, but we can do it, that's why we're following a Fannie Mae and then Freddie Mac guideline. That's why we can give a little bit more loan compared to the big banks. So next one is we have a multifamily loans from 2 family to 4 units. So I'm mentioned about the loan amount for the each units. So 2 unit, 3 unit, 4 unit have a different loan amounts, and then they can do the list. They can do the little less down payment if you go to 4 units. Then we have a program for the W2 only programs for the wage earner. And then if somebody start a job within 6 months, we just need a pay stub and then job offer letter. That's it. And then, so if they graduate the school, so we need a school transcript, because mortgage company consider the school experience as a job experience. So we have, for the self-employed, we have one program. If they have a business more than 5 years, so we just need a 1 year business tax return, personal and business tax return. So that's why, like if they have a 2020 have a little bit lower income, and then 2021 their business is better, so we can use only 2021. This is a very good benefit for the self-employed customer. And then second thing is the conventional credit score is minimum 620. So I'm writing down the 620 for the BPMI and 680 for the LPMI. So BPMI mean if the loan has a less than 20% down, every bank, BPMI means borrower paid mortgage insurance, LPMI means lender paid mortgage insurance. So if you do the more than 10.1% down, so we have a MI Buster program, but this is MI Buster program is no MI if we do 10.1% down payment. So people always asking, hey, I don't want to pay mortgage insurance. If you wanna don't pay mortgage insurance, we have a mortgage MI buster program, which we do if a buyer do the 10.1% down payment. And the conventional, we have a little bit update for the second homes and primary. So if the kids, the living, let's say California, and then parents living it at the New Jersey, and then parents has a like a less income, let's say 40,000, and then kids have a 300,000 from LA. And if they're if the kids living at the California and then parents living at the New Jersey, and then parents using the kids as a non-occupying co-borrower. So let's say on the parent at the New Jersey have a 40,000 income, and then kids at the California had a $200,000 income. We can combine the income as a non-occupying co-borrower. And then like people worrying about how if his kids want to buy a house, what are you gonna do? So if we have a 12 months consecutive payment history paying by the parents, the kids will be okay. They can buy another house as a primary. And then 2021 update is children can provide a home for the parents as a primary home. The same thing. If they don't have an income at the New Jersey parents, they can use only California kids and they're buying a house at the New Jersey. So that kind of things is kind of stretching of the buying power also. The next. The second slide is a Federal Housing Administration. That's the FHA loan. So I'm gonna update the FHA loan a little bit more detail. So FHA is always down payment 3.5%, the minimum down payment. But people cannot have two FHA loans. So if you have a FHA loan, you have to refinance or sell the house. That's the rule of the government loan. FHA also provide a 2 to 4 unit program available. And then credit score as low as a 620. DTI is up to 56%. So FHA loan is good for some people who has a lower credit score and then higher debt. For example, like a kids graduate the school and then they have a student loan. So because of the student loan, the DTI could be high. So that kind of scenario, we can say FHA loan is better. And the third thing is, like if you do the 3-unit houses with a FHA loan, so we can use a rental income from the other 2 units. So we call sufficiency test. We have to do sufficiency test if we're buying a 3 or 4 unit houses. And then if we're passing the sufficiency test, we can use the rental income from the other property. So let's say if there is 4 units, they can occupy 1 unit, and then 3 units, they can rent it out. And then we can use a rental income from there. So this is a kind of complicated questions. So that one, please call the local loan officers. And then this one has a little bit less seasoning. So after bankruptcy, 2 years, after short sale, 3 years, after foreclosure, 3 years, they can buy the house. The bad thing of the Federal Housing Administration, which is FHA loan, is the mortgage insurance. They charging 1.75 upfront mortgage insurance and then 0.85 for the monthly mortgage insurance. This is kind of very high, but you have to know you can buy the house or not. The second slide, next one, Chris. And then this one is Veterans Affairs, which is VA loan. It's one of the best loan in the United States. So, but you have to qualify. You have to serve for the Army or military. So feature is no down payment, no mortgage insurance, credit as low as 620, sometimes debt ratio is over 60, so it's best loan. So you have to find out the guy from the Army or Air Force or Navy. So this loan is good for the no down payment to $2 million house. But you have to have a qualified income. But somebody said, like if I say, hey, you can buy the $2 million house, but you have to think about your income and then your spendings. So debt ratio should be around 50 on this loan. So somebody having a difficulty to retrieve their certification of eligibility certification. If you have a difficulty, just let us know. We can have a COA for you, your customer. This loan has also a very less seasoning because VA charging 1.75 upfront fee. VA funding, we call VA funding fee, which is if they buying $1 million house with $1 million loan, they have to pay $17,500 as a funding fee. So kind of big funding fee, but there is no mortgage insurance on this program. So that's why seasoning is pretty low. So 2 years after bankruptcy, 2 years after short sale, 2 years after foreclosure, they can buy the house using this program. And the interest rate is pretty good. Still, we can give you like a low 3% range. Next. So I'm gonna update for the COVID-19 overlay changes. First one is a forbearance on the current mortgage. Many customers had a forbearance on their houses, but people thinking that's free, but that's not. That's wrong information. So from here and there, people like heard, hey, why you not doing it? Hey, this is free, but actually it turns out it's no free at all. So if you're not paying the mortgage, you have to pay any kind of method, like divide by 12 payment, or they're gonna like put your unpaid principal balance to your remaining balance. Let's say if somebody did not pay it for the 1 year, so let's say mortgage payment is $3,000, it's about 36,000 for the year, right? So they're gonna add that amount to the remaining balance. So let's say remaining balance was 300,000. The remaining balance become a 300,000 plus 36,000. So there is no free. So if you have money, just pay the mortgage. So if you start a forbearance program to buying a house, to do the refinance, so you have to complete the forbearance program. And then sometimes if you have a long forbearance period, they do modification. If you do the modification, after modification complete, you have to pay 3 more payments. So after that, you can buy the house or you can do refinance. And there's also many of kids do the forbearance on the student loan. So student loan is also same. They not forgive the student loan right now. So if they not paying, the unpaid balance will be go to principal. And then even though credit report shows 0 balance, which is no payment right now, the Fannie Mae program takes 1% of the loan balance, which is payment. Let's say 10,000 is the more student loan balance, is their monthly obligation is about $100. And then Fannie Mae, that's the Fannie Mae rule. The second thing is the Freddie Mac rule is 0.5% of the loan balance. So if it's $10,000 student loan, so $50 is your obligation. So people have to know if you're not paying it, that people think that's not my obligation of the payment, but that's wrong information. So please make sure. So your debt is your debt. So you have to make an on-time payment. You have to be responsible for your payments. The third thing is a self-employed borrower. So the government had some restrictions for the self-employed borrower, but we closed many self-employed borrowers. So we just need a 3 months bank statement from the business and then profit and loss statement for the most recent. So if it's like a stay as the same as last year's tax return, so that will be fine. So my updates is done right now, and then I'm gonna have a question. I'm gonna have a Q&A time. And then, by the way, 새해 복 많이 받으세요. Happy
네,
New Year.
감사합니다.
This
네네.
year is the Tigers year, so everybody be brave. And then I'm talking on my also meeting. So like last year, couple of years, about 3 years, if somebody not working hard, they got a case. But from this year, we have to hunting the case like a tiger. Otherwise, everybody 이러면 다 굶어 죽어. So yeah, so if somebody who do their best, they're gonna success. Thank you very much.
Thank you, Mr. 여 감사합니다. 그 퀘션
Thank you.
있으시면은 지금 한 몇 분 정도 우리 퀘션 앤 앤서 할 수 있는데 그래서 올해 이자는 어떻게 올라가는 이자율이 어디까지 올라갈 것 같으세요? 지금 현재로서 보실 때는 혹시?
That's the good question, because federal government will be increase their federal funds rate about 3 to 4 times on this year. So which means is could be go up more than 1% on this year. 그러니까 지금 federal government에서 올해 이자를 4차례 정도 올린다고 이렇게 어나운스를 했거든요. 근데 그게 3번이 될지 4번이 될지는 아직 정확하게 모르고요. 지금 가장 확실한 거는 3월 달에 한번 올릴 거라고 예측이 됩니다. So federal government will be increase the rate around March at least one time.
Okay, when we say Fed will raise the interest rate, that means one time usually they raise 0.25%.
Yes, so usually quarter.
Usually 0.25%. Okay.
Yeah.
So let's say 5 times means overall maybe 1% to 1.25% increase
Yes.
for the Fed reference rate.
Yes. If they increase the federal funds rate, like if somebody have a FHA loan, their loan will be going up by 1%. And then the mortgage rate is a little bit different because mortgage rate is based on MBS, mortgage-backed security pricing. So 10-year bond is kind of measurements. If it's 10-year bond is going up, everybody expecting mortgage rate is going up. 그 10년 본드가 올라가면요, 몰게지 본드는 올라간다고 다 생각하시면 됩니다. 그래서 지금 today's rate is around 3.625 for the 30-year fix without any origination point. So I believe around March it's going up to near 4%.
Okay, 감사합니다. I appreciate your presentation today. I think it's very useful, and I think we can apply to the market situation when we see our clients. Appreciate it.